Today we're discussing how to craft the PR and marketing strategies that position your company to be successful through M&A, both on the buy and sell sides. So as we have people trickle in here, I would love to kick it over to the team. Parag, Nick, Elizabeth, could you guys introduce yourselves to our participants today?
Sure, I'll start. Hello, everybody. Oh, Parag, you should probably start since you're first in that.
All good. Hi, everyone. So my name is Parag Sheth. I'm with Outcome Capital. We are a boutique M&A firm. We've been around about 22 years. Our focus is tech and tech-enabled services, healthcare IT, and GovCon. Typical deals are 15 to 200 million in revenue. If there are any questions, you guys have my contact info. Look forward to it. Thanks.
And hi, everyone. Nick Perdikis, I'm CEO of Devensoft. We've been in business now for just over 7 years, located in Chantilly, Virginia. And we help merger and acquisition teams on a global basis to improve the way they manage their M&A programs, from acquisitions, divestitures, integrations, through our SaaS-based web platform. So companies can help manage their acquisition pipeline, integrations, due diligence, and so on.
Thanks, Nick. It's so great to be here with both of you, so thank you. I'm Elizabeth Shea, the EVP for Public Relations for REQ, and we're a full-service digital marketing agency, and I'm here representing the PR and communications, strategic communications portion of this program. So delighted to have you both here. Am I taking this, Emily, or are you?
All right, I will kick it over to you guys.
Okay. So here's why we're here. One of the things that we found in the past is that as companies are looking for either sell side or buy side acquisitions, we want to make sure that we're thinking through the communication side to it. And so it's one of the reasons why we asked Parag and Nick to join us, because there's a lot happening right now. And I think what we'd like to do is figure out how to make sure that we can make the most of these unique times that we're in. So perhaps I can start off by talking to Parag and Nick, and just, what are you seeing out there in the marketplace for some of the companies that are here today? You want to go?
Yeah, I can start up. So, first of all, guys, thanks again, everyone, for being here, joining us this afternoon. Really, as we look at the market, just in terms of where things are, there are a handful of things we're seeing in the market. The deal flow, just looking from quarter over quarter, has increased dramatically compared to where we were in April and May. I think sorry, Emily, are we addressing just the slide, or are we just going through Elizabeth's question? Just to be clear.
We can tackle Elizabeth's question, and I think in that process we'll sort of talk through some of what's on the screen here.
I just want to make sure that, thanks.
Absolutely.
So yeah, so what has changed, right? So when April and May started, I think almost everything came to a halt. There were deals that were in process that sort of got halted, even with LOIs in play. I think in the last quarter, in Q3, I think folks got a lot more comfortable, both on the financial sponsor side as well as the strategics, where they figured out a way to get the due diligence done over Zoom, wanted to meet with management teams over Zoom. In many cases, people have driven and had outside meetings, and all those deals that were in process continued to go towards execution. I think Q4, looking forward, is going to be a lot busier. There is just a lot of capital that is looking to get deployed. I think there are tax implications that people are concerned with, and so that will also accelerate some deal flow. And I think just overall, there is a comfort level I've seen and heard of folks get deals done just over Zoom without even coming around to meet with the management team, which is unusual, but it happens. So will we be at the same level as last year? Probably not, but I think it's encouraging to see where things are as we continue to march forward here. Nick, what do you see?
Yeah, I think in talking and canvassing our various customers, they range from middle market up to global 50. So I'm talking to them on a regular basis, and I can say March was a significant drop off, obviously, for as soon as the economies were starting to slow down and companies were shutting down and trying to move to remote work. But what we've seen over the past 2 to 3 months has been a significant uptick. We're hearing from M&A teams on a global basis that they're doing deals again. We did see some deals with our customers that were closing in July, August, and we're seeing quite a big uptick in September. We did see in October, and I think that's continuing. I think everybody's sort of figured out, what does this mean for them? And they've factored into their M&A process, into their due diligence, like you said, more remote diligence efforts, more interviews, with using consulting companies who can actually go on site if they're international deals, where they're actually able to get people on the ground without having to travel from their, from the US to overseas. They can just hire teams that are in Europe or wherever they happen to be doing their deals and able to get on the ground and do some of that diligence work. So we're hearing quite a bit of, diligence has definitely picked up. I think that pent up demand has started to break free, and they're starting to, deploy those resources out there, and deals are happening again. So optimistic in the sense that it's a lot better than it was, companies doing deals, but I don't think we'll be back at the pre-COVID days, at least until maybe later in 2021 from what we're hearing.
So thank you. I think one of the reasons why we wanted to have this program is because at REQ, one of the things that we will focus on is for companies that are looking for M&A, either buy side or sell side. It's typically sell side, but we have done some deals on the buy side. There's a communication strategy that we believe should go with that. So it's part of the reason why we're here. We want to make sure that we're helping companies to think about the value proposition and what your growth strategies are. Kind of the things that you're doing in your communications program will reflect that. And in the event you want to land on the radar screen of some of your potential strategic acquirers or what have you, there are things that we think we can do. And Parag and Nick can both speak to that as well as us. So we're kind of excited about the program today. So Emily, did you have a poll you wanted to throw up there?
I did. Thank you. That was a great way to sort of contextualize our conversation today. Thanks, guys. We actually have already had a couple questions come in, so maybe I can give you guys those now and we can work our answers into the presentation, the conversation. One person would like to know how a communication strategy plays a role in the M&A process. And another person is asking, what do you think is the biggest communication downfall in an M&A process that should be avoided on the sell side? And I'm going to add in, the perspective from the buy side as well. I think that would be a good question as well. So without further ado, going to give everyone a few seconds here to complete the poll, and then we will hash through the results.
Okay, interesting. So yes, this can help us to really guide the conversation today. I think if we look at M&A activity for particularly the sell side, I think that's where we see most of our clients coming from it. So some of the things to think about are, we'll often tell clients, if you're looking for some M&A activity in the next 12 to 18 months, that's probably the time to start thinking about what you're going to say and how you're going to position yourself to the marketplace. So I think Nick can probably talk more on the buy side, since that's a lot of what your clients do. But the kinds of things that we recommend doing on the sales side is to think about how you're positioning your growth, your leadership team, your product, making sure that you have the right kind of third-party validation, if you will, and you have a good business story. So sometimes you might have the tendency to focus really on lead generation or how does your product positioned in the marketplace. But what acquirers are probably looking for is a track record and leadership team and successes from that standpoint. So those are the kinds of things to make sure are clear, either in your website or your digital footprint or press releases, that kind of thing. So anything you want to add on that, Parag?
Yeah, I think whenever there is an opportunity to, if you've thoughtfully made a decision to go exit the business, I think the time frame that you mentioned is critical, right? First of all, it's about 18 months prior, so that you want to prepare the business for sale. but also alongside it is making sure that the value proposition that you have, the financial model that you are working with, and the assumptions you're working with are part of your, you don't want to be explicit exactly in the communication strategy, but you want to weave those threads in so that the audience does get a feel for what the company stands for, where the leverage will be, where the markets are going. So there is some amount of information that people start hearing about from as it pertains to your business, right? And I think it does make a difference in terms of how you're perceived in the marketplace at the end of the day.
Mm-hmm. And so Nick, can you talk a little bit more about what you're seeing your clients on the sell side try to do, what they, how they're positioning themselves and what their communication strategies tend to look like?
Sure. So, communications is kind of a two-way street, right? Both parties really need to be involved in what's going to be communicated, the timing, and who you're going to communicate to. So a lot of our customers are doing acquisitions, but they're also doing divestitures, right? At certain times, large enough companies are buying and selling all the time. And so when you're thinking about communications, it's especially times like this, communication is really a very important part of the process. You got to be thinking about really early on. In terms of, what's happening now, people want to know, right? What does this mean for me as an individual, as an employee of this company? If I'm being acquired, what does that hold for me in the future? If I've been working remotely and it's been working well for me, how is the acquirer going to change that? Is there going to be an impact? Am I going to be expected to go into the office, 3 days a week or every day? How does that impact my personal life? If I have kids at home and other responsibilities I have to take care of. So it's very, very important to make sure you address those challenges. And working with HR, working with legal and other teams, right? That communication strategy can really come together. And both parties, obviously the seller and the acquirer, both have to agree on what that looks like. And how it's communicated. Obviously, it's really critical. Now, you're not going to be able to cover everything. It's impossible to think of every question, right? So you're obviously going to have an open dialogue as it's needed. But the timing, covering those really important issues, working, side by side with the right leaders in each company to come up with the right strategy and how it's going to be communicated is really, really important. And oftentimes, I think the poll kind of reveals, is a kind of a split between those that do it ad hoc and those that do it on a consistent, regular basis through some type of a structured approach. And I think, you want to go, obviously, the question leads you to thinking, you need to be thinking about a formal process, a way that you work with the right communication experts, folks in the industry and consultants to really help you formulate the right approach. Because it isn't just what you tell people, it's what you tell the market too, right? What you put on social media. And how that information makes it out. I mean, we see it all the time, right? As consumers of various brands, we hear from the CEOs, hey, we just got sold this company or acquired this business, right? And we're merging, and this is what it means to you as a customer. But there's a lot more behind the scenes, right? That has to happen for all that to work successfully. So, part of the process is having it in your roadmap, make it as part of your playbook, incorporate it, have your, start building out your templates and work with the right leadership team and with the right, if you need to, external consultants to help you craft that message so it comes across in the way you meant it to.
Mm-hmm. So one of the things that we have found is that a lot of the communication strategy depends on who your ideal target might be. So is it a strategic acquirer? Is it a financial acquirer? Are you looking for private equity? What's really the message that you want to communicate to those particular audiences? So maybe we can back up a little bit, Parag, and I know you can share some perspective on the different types of acquirers you're seeing out there, or the different kinds of entities and what they mean, so we can distinguish for that.
Yeah, absolutely. So look, I think part of the equation when we prepare companies for sale, it really is understanding the universe of where they operate in, and that includes certainly the financial sponsors as well as the strategic sponsors, right? and part of the reason for that is you just never know where the buyer is going to come from. There are a variety of reasons in our experience, sometimes you get surprised to say, wow, really? But they've had a thought out strategy. There has been board decisions that were made, or the investment committee made a decision on doing certain things, and they've started executing, which they probably hadn't done before. And so we tend to sort of look at this and say, let's capture a broader slate of universe when we present companies out there. That doesn't mean that you just go out and send out 1,000 emails. It's very thoughtful, it's very processed, it's very personal, it's one-on-one outreach. And that's a lot of because our networks are pretty deep within these sectors, so whether it's a private equity funds or whether it's strategic folks, and having been on boards ourselves, having been out on the operating company ourselves, we get the sensitivities on both sides. But the good thing is on both of those scenarios, there are reasons why CEOs may want to, or the entrepreneurs may want to be part of a strategic organization where they feel the product's going to continue to see the light of the day. In other cases, they feel it's a bolt-on and there's a financial reason to go and exit the business.
No, totally agree. I think what we've found is that if you're looking for potentially a strategic acquirer, I've had clients that have said there are pretty much 3 or 4 companies that are going to be the best suited to purchase us or to acquire us, and this would make the most sense. So you want to try to get in front of those folks, and it could be either through digital tactics or PR or analyst relations. Those things are really important. So we do try to really think through what is that going to look like, and are we really putting that forth? Mm-hmm. We had a client once who, if you think about the carousel on a website, have a panel, have one of your sliders be addressing the kind of acquirer that you're looking for and speak to that audience. So I think there's little tactics like that can be part of your strategy from an overall perspective in that standpoint. Financial buyers tend to want to see growth, high growth. So make sure that you think about those awards, the Fast 500, the Inc. 5000, those things are worth something. And if you build out that strategy to map to each one of those audiences, it's almost like you put together your buyer persona for your company, and you probably need to be thinking about the buyer persona for your acquirer as well. So we did have a client that was on the buy side and acquired another company. And I think to your point, Nick, they were really thoughtful about the internal communications, just in the way that you talked that through. But there were so many steps in that process, who was notified and when, and what does it mean? And by the way, we need to make sure our Glassdoor presence is really solid, because that's the first thing that people are going to do once they hear that they've been acquired is look at the acquiring website and their Glassdoor rankings. So is there anything else you'd want to add on that front, Nick?
No, you're absolutely right. And I was describing sort of the perspective of the post-close, right, as you're getting to the signing. But like you mentioned earlier, and Parag, you mentioned, it's really communication starts even at the very beginning, prior to any deal even being considered, right? It's how do you put yourself out into the market with that? So really good perspective, but that I agree wholeheartedly with everything you guys have said.
Yeah. And just to add to that, I think part of the reason you want to do that, right? There is a value associated. There's a lot of it is perception, but a lot of it is how you drive that value and how do you communicate that, and over time, how do you continue to enhance that? And communication does play a role in how people think about things. So it's an important part of the overall puzzle. Yeah.
Yes. So Emily, there was a question that I think we didn't answer. What was the second question that came in?
Moment, let me pull it up. The second question was, what do you think is the biggest communication downfall in an M&A process that should be avoided on the sell side? And then I would also love if you guys could cover the buy side.
Yeah. So, I mean, there are various different types of communications that happen, right? External, internal, up the chain, down the chain. And a lot of the timing is sort of critical in all of this stuff. There is a broader set of communication that what Elizabeth was talking about that continues to happen early on in the process. However, as you get more and more as you get closer and closer to the process, or as you enter the process, I think it becomes really important to sort of turn the strategy a little bit, because if it goes down to the employee level pretty quickly, I think there is a challenge that, you either start losing employees or they lose focus. And at the end of the day, the business can suffer. So I think managing that piece of the communications, understanding how the impact, or what the impact will be on the business and the operating part of it is critical. And so you have to really sort of thoughtfully weave the thread and figure out what goes out, what doesn't go out, et cetera. It's a pretty big component of things.
Yeah, and I love the idea that Nick was talking about, where you really put together a solid FAQ. So, our agency was acquired by REQ probably a little bit over a year and a half ago. And we spent a lot of time on that so that we knew that there were questions that were addressed, and we tried to anticipate what we could. And we didn't get everything together, but that was very deliberate. And I think that's also important to have that for clients. And customers and partners. So just being upfront about that and getting in front of it, I think is really important. Yeah. So I would say a downfall would be if there wasn't the time put into that internal communication, since that's really key.
Yep.
Yeah, I would agree. And it's interesting, again, with the current environment, when normally you do a deal, you would do a roadshow, right? You go to every major city, you go to all office locations, you bring everybody together to field questions and meet people and give them the level of confidence that, this deal is good for everyone and why they should all be behind it. But in this environment, you can't do that. You can't see people, necessarily, do that face-to-face meeting in person. So you're doing them virtually. Right. So that kind of creates a bit of a challenge because, the video camera, it doesn't replace the in-person, right? You can't, you lose the body language, you lose the emotion sometimes, it doesn't all transfer really well through the camera. So you have to be very deliberate about that. And you've got to take the time, schedule these sessions, take the questions, do one-offs if you need to, just be more diligent about it. And from like Parag said, if the word gets out too soon and you're thinking about selling your business and you haven't properly brought the right leaders into the discussion, right? If you think you're going to keep it quiet, it's not going to happen, right? It's going to be really hard. People find out, rumors start. I think it's better to get ahead of it as early as you can with the leaders within the company, because they're going to be part of the discussion anyway with any acquirer. If you're selling your business, they're going to want to meet the key management team, right? The leaders in the business. So it's better to get everybody on board, answer those questions internally, so that the stuff doesn't really spill out during the conversations, during the sort of diligence calls that you're having with the buyer or potential buyers. So just to, realize that and make sure you take the proper steps early on.
And, maybe I should add, or I'd like to add that what we found when we were looking at an acquisition, the reason isn't bad. It's positive. I think for us, we really wanted a partner that had some digital capabilities that we didn't have. And so we did communicate it relatively early, just because we knew that that's what we were looking for. And it was a positive thing. So I think there's even sometimes a stigma that acquisitions are scary, but sure, there's integration that's going to take place, but it's a positive thing. And I think we've all benefited from it. So perhaps that could be part of the conversation if we go to post-integration, since I know, or post-transaction. Perhaps there are some best practices. Maybe you could start, Nick, that you've seen, since I know you help manage deal rooms, if you will.
Elizabeth, I don't mean to interrupt, but we did get a question from
Okay.
the audience. How far in advance do you recommend developing this plan? And is it common to make changes and adjustments as the process moves along?
Absolutely. I'll start by saying that we typically recommend 12 to 18 months ahead of time, start to lay the groundwork and really be thoughtful about your digital presence, particularly now, since you're not able to meet in person as much as you could before. Think about your digital presence. think about what you're communicating, what kind of track record you can communicate through awards or press releases. Momentum press releases are really solid to just demonstrate traction. You know, look bigger than you are to a certain extent, if that's what your goal is to get acquired by, you know, a financial buyer perhaps. But I think the timing is really key to not do it right before you're looking to actually have a transaction, because the process is a process. So that's how I would answer that question.
It is true. And I think the part I would add is you got to start from the end, right? So a process is 4 to 6 months on the sell side typically. And you want to give yourself some room to sort of ramp up to that stage so that it's all buttoned up before you enter the process. And a good 12 months prior to launching the process is not a bad idea to say, look, here's who we are, here's what we do, and here's why we are the best thing in the world right now. And that's what you want to communicate to the world. So begin with the end, and I think you're about the time frame is 12 to 18 months is where I would go.
Yeah, I would also add that there are probably things to line up strategically in the process. So perhaps, you know, making strategic leadership hires, you know, having a CFO, really communicating to the marketplace that you're serious and you're solid about who you're looking to attract. So that all sends a message, whatever you're doing internally and how you communicate that out to the marketplace.
Yeah.
Great, thank you guys.
Okay, so let's talk about the transaction. Something happens and we were able to promote the success to the marketplace. Let's talk post-transaction. Nick, do you want to talk a little bit about what you've seen work and what the pitfalls might be?
Yeah, so post-transaction, I think the biggest hurdle we've seen companies where they've struggled, and we've seen our share of companies that have struggled, is when they don't have a well-defined team put together. You know, they're sort of cobbling the team together as they go, trying to figure out who's going to lead the various work streams and getting alignment between both buyer and seller, right? And what is that new company going to look like? So it's really, really important early on in the integration planning to have selected your leadership team. What is that team going to look like? Who's going to be in each of those positions that are critical to success? And making sure that that is communicated properly, right? Once the deal is announced, you know, who are going to be the leaders. In an ideal situation, depends on the type of, you know, the thesis around the deal and whether it's strategic or a bolt-on, you know, it's different types of integrations or acquisitions will lead to different levels of engagement on the integration side and complexities. But if you, you know, once you've selected the team, making sure that there is involvement from both sides, right? Both the seller and the acquirer, looking obviously to take the best of each company and bring it together as the new company going forward. So as I said, where I've seen the biggest hurdles is some of those things are left up in the air. They're not well decided before the close, and it creates a lot of confusion. And oftentimes, you know, the deal just does not integrate quickly enough, and that's really a reason why you've seen in all the various research and studies over the years, you know, from the big companies, big consulting firms, that a lot more than half of the deals don't generate the value that was originally expected, that they went to the board with and said, this is what why we're doing this deal. This is what we're spending, you know, paying all this money, and this is what we're going to generate. And it just does not always go there. And part of that is, you know, they didn't have a well-defined team. They didn't execute. They didn't plan properly. And of course, that's where, of course, we try to help, right? With our software and any software really, that if you're using the right tools and technologies to help align your team, organize your work, make sure you've got all your interdependencies well defined, understand what everybody's responsibilities are, and make sure everybody can work, especially today in this kind of remote environment, everybody being on the same page, right? They know what to do, when to do it, what the priorities are, and who to go to if they have questions.
Mm-hmm. Yeah, I know one thing too that from a communication standpoint, I would add is that the the momentum should not drop after an acquisition. I mean, making sure that you're continuing to showcase the team, showcase your successes, why the combined effort has been so solid and so strong. There's an external communications aspect to that too. So we do recommend that that it doesn't just end when that transaction happens. We need to be thinking about what messages it's sending to the marketplace, because you've seen, mergers and acquisitions in the news, go south or not go as planned. And so sometimes the success, and that affects things like stock prices and the valuation of a company. So to your point, yes, if those things haven't been considered, then you run the risk that you are not going to get the ROI that you expected from the deal.
Yeah. Can I add just one other thing to that, Elizabeth?
Sure.
Which is, having lived through this a few times, so, I've usually been on the side that we got bought. You learn right after the first, second, and third one. I think the couple of things that sort of stood out was just understanding and accepting that, hey, if you sold the business and then in the process of prior to the closing, if decisions were made that this is how, as an example, a sales process is going to run, it may be very different than what I have done, but the other party has a way of doing it. And if that's the better way because it applies to a broader set of customers, letting go of that is really hard for folks to do.
Mm-hmm.
Also is a really big challenge at a senior leadership level to say, look, it's not your business anymore, and accepting that and understanding that is a huge part. And that comes with culture change, because it's not going to be the same. I think it's a softer part of the business that becomes really important for folks to look at and understand and accept. And one of the things that we did really well in our last exit was we actually had an external team that helped us pull this together and say, look, guys, here's what's going to happen. And we sort of walked through, we understood where we were going to be stronger, where the other party was going to be stronger, and everybody sort of came together and said, okay, day one, here's what it's going to be. And you had the new logo, new signs, all of that stuff happened. And culturally, people, that doesn't happen overnight, but if it is well communicated and reasonably understood, people will accept it. Otherwise, it's tough. And so, yeah.
No, agreed.
You made a point about customers, Parag. One thing that I think it's obvious, but just to say it anyway, is that communication to your clients and customers about what that means to them is really, really important. I know I've talked about internal, right, and some external, but really the external around the customer is really huge, because your competition, they're going to try to take advantage. They're going to try to spin it to their benefit. And so customers are going to, especially if you're buying a company that you have overlapping customers, right? Who's going to be the new account manager, right? Who's going to be responsible for those accounts? It's going to be, you're going to have to deal with those issues inside the sales team and compensation plans and all of that. But customers, obviously that's your business. I mean, if you lose your customers, there goes the deal. So.
Right. It's so important. And I think that's why putting some of those thoughts together ahead of time and really, really diving into anticipating what kind of questions are going to come up and knowing what those answers are, and then what's communicated to the clients and partnerships too. So if there are partners in the ecosystem, that's going to be really critical as well. So very interesting. Okay. Any more questions, Emily? I
think we have not had a couple come in, but I will let you guys know when we do. Okay, cool.
So we're coming up to about 35 minutes after. What piece of advice can you give, Parag, if there's a person on the line who knows that that's going to be an important part of the next couple of years to sell? You'd mentioned tax implications and a couple other things. What piece of advice would you give?
I think the first thing I always ask people is, why do you want to do this? Because I think if it's not clear, it becomes really hard later on. Whether it's raising capital, whether it's exiting the business, there has to be a clear reason. And whether it's, hey, look, we've grown as far as we can with what we got, we need more resources, or, I've been running this thing for 20 years, it's time for me to move on, or whatever it is, but having that clear articulation. Because what happens is later on, there's buyer's remorse. And you never want to be in that spot as an owner, as an entrepreneur, as a CEO, as a management team, right? So I would say have a clear understanding of why you're going to do this.
Mm-hmm.
I think the second piece of that is know that it's a dynamic process. Like anybody can say that here's what it's going to look like. It's just not smooth. It's much like the entrepreneurial journey. You can have highs, you can have lows. And the best thing I can say is don't get wedded to any single thing that comes in. Even if it's an offer, keep doing what you got to do. Keep going out and making sure you've got backup to backup to backups, right? We've got deals in the market with 5 LOIs right now, just because you don't know. The capital can move, the risks can change, or whatever happens. So I would say those are probably the top 2 things. Know the why, have a backup plan, and then just stay committed to the process and believe that it's going to work through it. If you've got a good banker that can help you through that.
Yes. And I think the role of the investment banker makes a big difference. I mean, that's very important to be able to know that person has your back. And
it does, and I think if you've got someone who's had the experience and been in their shoes, it's invaluable.
So Nick, what about you? What can you say as far as your pearls of wisdom for someone who's looking for either buy side or sell side?
So I think to add to what Parag just said, because he mentioned about you need to make sure you have more than just one LOI, right? It's sometimes tempting when you get a deal, a buyer approaches you, maybe you were thinking of selling, maybe you weren't, but hey, sounds like an interesting opportunity. Let's just see what it's worth. What's somebody willing to pay for my business? And you get all wrapped up on that and get excited. It's like, oh, that sounds great. Let's move forward. Mm-hmm. And you don't have a good deal team on your side. You don't have good legal and financial advisors to help you, or even brokers, deal brokers that can help you, intermediaries. You're really kind of selling yourself short, right? So you want to have multiple. Don't ever go with one deal, right? Even if you think it's a great deal, you will almost always get a better deal if you entertain additional offers. But to get those offers, right, if you don't know how to do this, you need to engage the right professionals who know how to go out mm-hmm. and shop your business, even confidentially, right? It doesn't mean you're going on the auction block, but confidentially get out there and, look for other potential suitors that can come in. And then you've got leverage, right? I mean, you have no leverage if you're just you're only talking to one potential buyer. So mm-hmm. deals do fall through quite often. I can't count on one hand. I could, if I had a nickel, right, for every deal that I hear about that's going well, and then, 2 weeks later, it's off the table, and then it's on the table again, and it's off the table a month later. And there's just so many different variables, emotions. If it's a smaller company, you're buying a family-owned business, or you're selling and you get cold feet and you got other people that need to sign off on it. They're not sure. So there's just so many other variables besides the financial and economic and market dynamic things that happen. So better to have more opportunities, more people you're talking to that you go to the dance with, and hopefully one of those will be the right one for you.
Yeah, at REQ, we refer to what we call destinations in quotes, which is a fancy word for basically goal setting and figuring out, what is it that you're trying to accomplish in your communication strategy? And one of those destinations is M&A and fundraising. The second destination is lead generation. The third destination is recruiting. And the fourth destination is thought leadership, building thought leadership for yourself. So each one of those destinations will drive different communication strategies. And so that's partly why I love that we're having this conversation, because in the M&A and fundraising destination path, if you will, those kinds of things are very important to understand. Why is it you're doing this, to your point, Parag? And making sure that if you don't know why you're doing this and what you hope to gain from it, then chances are that deal will fall through. So as I mentioned early on, my firm Speakerbox was acquired by REQ about 1.5 years ago, and we were very deliberate in why we wanted this to happen. And I think even post-acquisition, it was important for us to communicate that this is why we did this for our clients and our partnerships and our employees. And that's never wavered, because you don't want people to think, oh, what happened to that? What happened to Elizabeth? She's not here anymore. Well, I wanted to be thoughtful about doing it at the right time when the market was ready, and the market was ready for basically an agency that had a full set of services. So I can't say enough that was really clear. It wasn't because of an exit. It was because it was going to be 1 + 1 = 3, hopefully. And if you can communicate that, then I think that really helps drive home the right message.
Awesome. Thank you, guys. We've had a couple of questions come through the Q&A feature. This one is, what's changed with post-merger integration best practices given COVID, including communication and other work streams?
Who wants to take that one?
So I'm going to guess that the question is what's changed with post-merger in terms of integration best practices. I think right now, it's even harder, right? If there is a deal closed, and we've had a couple, and I'll give some examples here in a minute. But it's really, really important that there are folks within the business who are extremely clear about what's going on. The principles haven't changed. I think the acuteness has. And so the ability to get employees all on board once the merger is starting to happen, so that everyone's clear about what their roles are going to be. A lot of what we said earlier, it applies even more, but try doing that remotely now. And I think it's just really, really difficult to do. So I would say over communicate is extremely important internally. Over communicate externally to the clients and the marketplace. I think that's going to be extremely important. And beyond that, be empathetic, because I think there's a lot of challenges that people can imagine real. They may not be real, but it's there. There's a heartburn. And I think it takes that extra step of empathy to really put oneself in the shoes of the other folks and have them cross the bridge here. So those are probably the top 3 things I would suggest.
Well, so I'd like to add that that's so true, the over communication portion of that especially. One of the things that I had a client say to me the other day was, what's really interesting is that our product is better than our competitors. Our competitors are just out marketing us right now. So we really want to lean in on that. And the post-COVID or in COVID, or because of where we are today, there's a chance to do that in a much easier way, because you're not attending a big conference and they have a 30 by 30 booth and you just have a 10 by 10 booth. You can have a visual or a virtual presence that really communicates a strong message. And so be really thoughtful to over communicate that, because this is the time to potentially invest in that area. And there's an opportunity from that standpoint, because everyone's going to look the same on Zoom, potentially.
That's right. Yeah, I think it's whatever your business is doing to address COVID and the impacts to your various aspects of your, whether it's on the supply side, supply chain, distribution, manufacturing, sales, right? Every aspect has been looked at. I think those are some of the challenges that you would also look for in the acquired company. In your integration planning, you need to do the same level of diligence and planning across those similar work streams on the other side. So when you bring together your new pro forma and plans, you've taken those into consideration. So I think, a lot of companies are already building these into their plans. Are there best practices? I don't know that we know that yet, other than some of the obvious things you would do. But as long as, you take all of this into account and make sure that your numbers, your forecasts and your projections all take that into consideration. You're not working off, some pie in the sky forecast that is no longer valid. I think that, you're probably doing the things you need to be doing. That's
great. Thank you, guys. We had another question come in. How far into the M&A process do you want to tell the company or employees, and when is a good time to incorporate them into the strategy?
So, that's always a difficult one, right? And I'll give you an example. We had a deal that started last November. It was supposed to close in March. And like March 16th is when it was supposed to close. And clearly it didn't happen, right? They had to go with it. there was a big private equity sponsor who was going to acquire the business. And the company was doing well, and they hadn't said anything to the employees. And that turned out to be a good thing, because part of what they had to do, and I think this is where, and not just because I'm one, because I've been on both sides now, having an investment professional in the middle is really important, because what the CEO and the management team did, they put their heads down and ran the business, right? And come March, the buyer walked away. And these guys ended up doing what they needed to do, came around July and wanted to come back in the market. And they'd actually grown the business through those last 4 months. And so the same buyer came back out, and there were other offers as well at that point that we had gone back to and said, look, they're going to come back to market if you have an interest. So the deal is actually going to close this week now for 40% higher price. And so
Congratulations.
it's really is helpful to have somebody in the middle. You just want to isolate the management team. But it's a tough one. I know in my past experiences, and what we've also seen with our clients, is it just depends on a number of factors. One is, how mature is the team, especially the management team. You want your core management team, obviously, know this. And then there are so many things that come up even towards the latter part of diligence before the closing that you don't know. So having a couple of folks picked out that are have the maturity, walk through this, have the trust factor, bring those folks in as you get closer to the end of the process, and then make sure that the integration plan is working with the similar folks on the other side. If it's a strategic sponsor, if it's a private equity sponsor, it doesn't matter unless it's a bolt-on. So it just, if that's the case, I would start bringing them in slowly as the deal comes closer. So if it doesn't happen in the example I just gave, no harm, no foul, right? The folks are still operating, continue to do what they need to do. And hopefully 6 months from then, you can still close the deal and bring more and more folks into the know.
Mm-hmm.
Awesome.
I would also add that I think there's a difference. I mean, I think you can always say it depends. It depends on the leadership team. It depends on where you are in your journey and the life cycle. And also depends whether you're a product or a services firm. I think there's value in communicating the leadership team as a whole. If you're a services firm, I know that, I brought my folks in very early. They were part of the process. It was a deal for us as opposed to a deal for me, and I think that really worked well in our case. But you're right. If it doesn't happen, and particularly in COVID, then you run that risk that you get people fired up for something, and then it may not happen. So, but if you're a product company and you're looking for, say, a strategic acquirer, the assumption is going to be that this is going to be really good for all the employees, and you can actually invest in, innovation and continuing to get to the next level. So it partly, I think, also depends on your motivation and the why you're here.
Yeah.
That's great. Thank you, guys. Another question from an attendee: what percentage of deals do happen with multiple acquirers? Any ideas on how to create a market?
I'm happy to go again first if you guys want.
Go for it, Parag.
So, the percentage of deals with multiple offers is a component of a couple of things. I think, first of all, it starts with the business and how well the fundamentals look, right? You can, if the business is robust and it has done what it's supposed to do, which is it has either grown or has profitability, I think it's a lot simpler to make sure that we can package that and bring it to market in a way that is attractive to the set of buyers. The second piece of that component is knowing the universe of buyers, right? And so this is where, again, I feel that having, and I believe it, we've got our own portfolio companies, which we bank through other bankers. We don't sell our own. But having somebody there who knows a broader set of universe, because we do, this is all we do all day, whereas somebody who hasn't done it, if this is the first one, second one, third one, that's the only deal they've done, they're not going to know the 400 or 500 different folks that are in the market that could be the ideal ones. And I think ultimately for the entrepreneur, the better return will be when they have multiple offers. So having someone involved who's got the breadth and the depth in the business that they are in is incredibly helpful to make sure that the business gets the right value that it deserves in the marketplace.
Mm-hmm.
And I would say, I think majority of deals have multiple potential acquirers lined up. If you're using, again, proper advisors, right, to help you through that process, they will be able to reach out and even, you could start, a lot of people start with, if it's a smaller business, start with their attorneys, the law firms.
Mm-hmm.
They represent a lot of different clients, especially you work with regional, larger firms that know a lot of businesses in the area. They have their own M&A team, right? If you're larger, you want to work with, working with an investment banker, obviously they have a list of potential acquirers. Even internal, right? If you're talking to your leadership team and industry, if you're in your industry, a lot of potential companies. So sometimes, using that third party, that intermediary really helps to broker that conversation without you, personally as a CEO or executive, doing that, making that call, unless you have a personal relationship there. Mm-hmm. So like your example, Parag, you guys got 40% more. That's because you had multiple acquirers in the deal, right, at the time. And it is about, just casting a wide enough net, not to everyone, because, eventually gets out, but just to, those that are the very likely, right? I think, Elizabeth, you had mentioned earlier in the call, in this discussion about some companies just set up themselves to be bought by a certain company, right? They know. Right. And that's how it was with, the Cisco, the networking company. Companies would start up and they would do everything. They would message, they would market, they would brand, knowing that they would get bought by Cisco one day. Mm-hmm. Right. And there's other examples like that out there. So if you have that, the big player in the market is the ideal strategic deal for you, because it's good for you, for your company, for your people, everybody's going to like it. Then you work towards it, and that's maybe where you go. Mm-hmm. But otherwise, I'd say, and I've been in this boat. I've owned and been through deals, so I know, more potential suitors, the better. I can tell you, right? And a lot more negotiating power out of that. And then, like you said about earlier about the when you let your team know. Well, outside of your leadership team, right? It's better to hold it closer to the vest until the deal happens, because just too many things can happen. Mm-hmm. That can delay it or, cancel the whole thing altogether for reasons having nothing to do with you. It might have been the acquirer having a change of strategy, or the board decided, we're not going to go into this market. We're not going to expand into that geography. We're going to pull back because of a number of other internal reasons, and you get caught up in that. So
mm-hmm.
One last point to add on this, guys. I think on the value creation piece, right? There is certainly the number of deals, that number of LOIs, and number of buyers that is a factor. I think the other piece is the structure of the deal. And I can't tell you the number of times that what looks like a high bid on paper isn't always that way, because of the way the financing is structured. It can be in the form of earnouts. It can be in the form of what do they count as agreed. There's a whole bunch of stuff that mm-hmm. goes in structuring the overall offer. And I think there are many times you'll see the deal on paper doesn't look good, but when you work it up a little bit or figure it out, then that could be a better deal. So just having that visibility also is an important component, and which is a benefit you get with having multiple different folks come to the table here.
Yeah, on that point, I think one thing that I've noticed recently is that, particularly during these times, is that the number might become, the valuation of the business might still be the same, but all the terms are changing, and they're changing rapidly. So to the extent that there might be more milestones or commitments that have to be made before particular payouts are done. So it's not always a clean cut deal anymore, because people are might be nervous. So I think we're coming up close to time. Emily, anything else, or should we wrap this one up?
So we do have questions that we have not gotten to. So if you are somebody who asked a question and we didn't get to it, please feel free to reach out to us at REQ+A at req.co. But one last question, I'm hoping this might be an easy one for you guys, but do you have any recommendations for technology or tools that might help in the M&A process?
Well, Devensoft.
A little biased there, but yes, I would say Devensoft is a tool you could use. So you can always check us out at devensoft.com.
Parag, anything you recommend?
I think, look, it just, you know, what Nick's company does is a unique tool. I think data rooms are a key part of a process anyways. You know, but yeah, I think it's, there are a handful of folks out there that do stuff, but we've seen Nick's tool a lot and it works well.
Awesome. Thank you guys. Any closing thoughts for our attendees as we close out?
You know, look, I think it's an exciting journey, right? If anyone on the in the audience is thinking about an M&A process, it is an exciting journey. It's probably the largest transaction that a lot of folks will go through. And I think you want it to be a pleasant one. And I think the way you get there is to make sure that you have the right folks involved from the beginning, whether it's part of the communication process, pre and post transaction, whether it's having the right investment professionals around you, whether it's having the right tools. It's all of that is what actually makes the whole thing work smoothly and allows you to focus on the business. So hopefully that's been helpful.
Yeah.
Yes, and go ahead.
Sorry, I would add that you know, if you're not familiar with, if you haven't done M&A, you know, you're an occasional or episodic type of acquirer or seller, right? It can be a very daunting journey, scary one. You know, you spent a good part of your life building a business, and now you're looking to sell that business. Bring in the right experts. That's all I would say. Just don't get, you know, don't think you can do it all yourself. You know, as a CEO, you probably feel like, you know, you can do it. You know enough, but trust me, there's a lot more you don't know. So bring in the right professionals and experts to help you. It'll be well worth it.
And the last thing that I would like to say is that oftentimes we talk to CEOs and they haven't let their marketing folks know that this is potentially a goal, whether it's buy side or sell side. And I'd like to encourage them to actually bring in their marketing team, because if the marketing team is brought up to speed on this, that can be really beneficial, because that he or she can be thinking with an eye towards, how do I make this company really look solid and make sure that the messages are coming through, versus just focusing on lead gen or just focusing on thought leadership. So that's probably someone to bring into the loop.
That's awesome. Thank you all very much for being here with us today, and to all of our amazing attendees. You'll see on the slide that we have everyone's individual contact information, but like I said, if you have any additional questions, please feel free to reach out to REQ+A at req.co.